Okay, good morning then, everyone, and welcome to this, our very first revision webinar for ACBP 5121 and to prepare you then for test number 1. So if you want to send us a quick wave to your fellow colleagues, so you're now conversing with all students on all campuses of Emirates. So if you want to say good morning to someone in Cape Town or Pretoria or Sandton, send them a quick wave. Just remember again, you can't use the raising of the hands function because your microphone is not working. Okay, so then this morning we have got 2 sessions. In the first one, we are going to put our main focus on revising learning unit number 2. And then in our second session, our focus will fall on that all-important learning unit number 3. With you this morning then, just to introduce ourselves, from my side, it's Ina Frost. I will do the presenting. And then I've got Salama. Salama, do you want to say good morning to our class?
Good morning, everyone, especially to my students from the Nelson Mandela Bay campus. But good morning to everyone from all the other campuses. Thank you for joining us, taking the time out to do this important revision for your upcoming test.
Thank you. Good morning, Salama. Salama has got the quickest fingers in the business. So she is going to be assisting you with any questions that you may have as we go through our presentation this morning. She's going to be answering your questions there in the chat. So please start putting your questions in the chats for her to help you. And then she will also at times just join into the lecture and also just discuss some of the points that she's seeing is coming out in the chat. Then, yes, our session is being recorded this morning, and later today you will find the recordings are uploaded for you to YouTube. There's the School of Management Studies channel, and there you can find all of these revision sessions are uploaded there. Even the ones we did last year are also still on the YouTube channel. So even if you want to go and watch the revision we did last year with our students, then you can also access that on YouTube. Right, so we're now preparing ourselves for our all-important test number 1. So that's our very first test this semester. This test then is going to cover the first 3 learning units in your textbook. So learning units 1, 2, and 3. It's going to be for 50 marks, and we give you 1 hour in which to complete it. That is for all of our contact students. Some of the students that joined us this morning, you may be our distant students. And of course, your assessment profile looks a little bit different, but the one that's up on the screen now, this is the one for our contact students. And then in the meantime, if you want to just put in your diaries and save the date, on the 28th of April, also starting at 10 o'clock, we will have our test 2 revision. And you'll notice that in our attendance register this morning, I have already asked you what would you like to see in that test 2 revision, because we really want to make sure that these kinds of sessions are hitting the mark. So we want to make sure we are addressing the kinds of concerns and the kinds of things that you would like to see in these types of sessions. So please give us some ideas, and then we can make sure that we structure these sessions to meet the need of the students. Okay, so what is it that we need to do this semester if we want to be successful in this module? And because we're only now at test number 1, I always feel it's important just to talk through this at this stage, because there are still some course corrections that you can make if you're not on the right track to make sure that you will be successful this semester. So obviously your number 1 responsibility is to make sure you are attending all of your classes with your lecturer on campus or online. That is really key if you want to be successful this semester. And if you haven't done so to date, then please, going forwards now, you need to be attending all of your classes. Then you also need to be working consistently at home. So you nearly need to be matching hour for hour. So if you're seeing your lecturer in class 4 hours in a week, then you should be working at least 4 hours at home as well. Because in this module, it is a combination of being in class and doing your own revision if you really want to be successful. Then your best resources to use, particularly for your revision that you're going to be doing at home, is first and foremost your textbook. And you'll see as I go through our session today how many times I'm going to refer you back to your textbook. That is really your best resource. And then, of course, there's lots of stuff uploaded for you to ARC, and also some additional information uploaded by your lecturer. Your key thing is this semester is please don't fall behind, because accounting is a series of building blocks. And if you haven't got a strong foundation, say in learning units 1 and 2, then you're going to find when we start learning units 4, 5, and 6, your tower is going to topple over because we are just building continuously on your knowledge from one learning unit into the next. Okay, so this is now all the stuff that you're going to be able to do before you actually enter the test venue. But then on that morning or afternoon, when you're actually in the test venue, there are also certain things that you can then do within that hour that will really benefit you and help you to be more successful in that particular assessment. So in today's class, I'm also going to touch quite a bit on these exam techniques and what it is that you can do when you're in the test venue to make sure that you are optimizing your chance to getting your best mark. So that's the things that we as lecturers want to see you doing throughout this semester for you to be successful. And just the thing that we cannot overstress is that in Accounting 1A, there are no shortcuts. So please, you can't kind of just say, okay, I'm going to attend class, do a few exam techniques, and be successful. Unfortunately, in this module, you do have to follow each of these steps that I have set out. Okay, so that's just where we wanted to start the morning. Now we're going to jump into the actual content and make sure that you are ready to answer questions on each of the learning units. So we're starting our focus on learning unit 2, and learning unit 2 deals with your accounting equation and your double entry system. I always like for us just to go back to our module outline. And remember, this module outline is available to all students. You can find it on the Emirates landing page. And in this module outline, we tell you what is the purpose of the module, what's the overall outcomes of the module, and then per learning unit, we also break it down even further into the learning outcomes for a particular learning unit. And it's always good for you just to go through these outcomes and to say, right, could I answer a question based on each of these outcomes? Because these are the 8 key things that we want you to know when you have finished studying this learning unit. Okay, so we're going to jump straight in then. As you know, in first semester, we deal mostly with the sole trader. So that is that single individual that gets a really good idea and they then just start running a business. So the first thing is a little bit of homework now for you. In the chats, Salama and I want you to quickly write down for us the accounting equation. So if everyone can quickly in the chats post the accounting equation. Okay, excellent, excellent. I'm seeing lots of accounting equations, and Salama and I are posting gold stars there. To everyone, thanks for taking part. I think you've all got your accounting equation. That's good. Right, so now let's talk about this accounting equation. So remember, we say what the business owns must at all times be equal to what the business owes. What is it that the business owns? The business owns assets. Who does the business owe money to? It can be to third parties, and it can be to the owner of the business. So we're saying the accounting equation says what the business owns must always equal what the business owes. We own assets in the business, and we owe money to third parties and to the owner. The money owed to the owner from an accounting perspective, we refer to that as owner's equity, and the money owed to the third parties, we refer to those as our liabilities. And as many of you said correctly there in the chats, the accounting equation then says assets must always equal owner's equity plus liabilities. Then in your textbook, we give you the official IFRS definition of an asset, and we define an asset as a present economic resource controlled by the business as the result of a past event. And we split our assets into two main groups: our current assets, which the business will own for less than a year, and our non-current assets, which the business will own for more than 1 year. Our official definition of a liability, that is a present obligation to transfer economic resources due to past events. Again, we split our liabilities into those two groups: the long-term or non-current liabilities, which will be owed for more than 1 year, and then the current or short-term liabilities that will be owed for less than 1 year. Owner's equity is essentially just the difference between the assets and the liabilities. So if you subtract your liabilities from your assets, that will equal your owner's equity. And owner's equity is made up out of 4 components. So it includes the capital. Remember, that's the money the owner puts into the business. The drawings, anything your owner takes out of the business, your income, and your expenses. And these definitions, for all of these different terms, you have to know your definitions, and you need to know those official definitions that I've got here on my screen. So we call them the formal or official IFRS definitions. And when we ask you to give these definitions in an assessment, we're looking for these exact terms and phrases that you can see here on my slide. When we mark these definitions, we normally give very little leniency because we are expecting you to give these definitions in their exact wording. So the first thing out of Learning Unit 2 then that you must know is then your definitions for all of these key terms. And then the second thing that goes hand in hand with it is you need to know this chart of accounts, that figure 2.2 in your textbook. So if you have a textbook with you now, you can quickly open up. It's page 53 in your textbook. This chart of accounts is really gold. And you will see throughout this morning's presentation, I'm going to keep coming back to it, and I'm going to keep coming back to it, because this gives you an excellent summary of assets. It already gives you the split between non-current and current, and then it gives you all the examples that sits under that classification. It gives you examples of expenses, of income, and of liabilities. So this page is really important that you have to know it because otherwise you're going to battle to do any of the questions that we can ask you out of this learning unit. Okay, so as I said, please, students, make sure you know your theory. Oftentimes, students think that because this is a numerical module, they don't really need to bother with theory. They just need to jump right in and do the calculations. But if you don't know how an asset is defined, or if you don't know what is an example of an asset, then you really can't do any of the application questions either. So as I said, make sure that you know your definitions and that you know that chart of accounts that was up on the screen just now. So now the next question, of course, that we're curious to answer is how can we now test you on this in an assessment like this upcoming semester test? So let's have a quick look. So in 2024 then, we asked our students to provide the formal IFRS definition. So there you can see we actually asked them for the official definition. And then in the 2023 exam, this time around, we asked for the definition in the student's own words. So for each of those definitions, assets, income, expenses, liabilities, for each of them, you need to make sure you can either provide us with the official definition or you've got your own definition, your own words also ready so that you can answer the question either way. And of course, in the assessment, you must now check carefully. Are we asking you to give the formal definition or are we saying use your own words? And a good indication on that will also come in terms of the mark allocation, because you can see we allocating quite a bit more marks to a student giving us the formal definition to where we are just asking for a definition in their own words. So also make sure you just look at this mark allocation, because that will also help you determine, is it a formal definition or is it own words that we're looking for? And when you read a question in an assessment, and so this brings us to one of those exam techniques that I also just wanted to share with you today. So when you read, for example, this question 1.4, you have to make sure that you're reading it and all the detail in it. Because look, for example, how many little details are in this one sentence. So the first thing we note is the question is asking us for our own word definition, right? So immediately we know it's not the IFRS, but it's our own words. Then the question goes on to say we also need to provide an example. So that's the next thing we have to do if we want to get the full 2 marks. And then the last bit of information, it's an example of a current liability. So it's not just an example of any liability, it is specifically a current liability. So you can see just in that one sentence, there's 3 pressure points. And if you have missed any one of those 3, you would not have optimized your marks for this question. So please make sure you're really reading your questions with great care, because I think Salama will agree with me and the other lecturers in our classroom today will agree that that's probably number one problem we see when we mark questions, is that the students are just not reading the required properly. They just jump in, they just read, oh, define, and they jump in and they start giving a definition, and then they don't look at what are the other things that we also want. So definitely make sure you are reading with care in your assessment. Then another type of question we can ask you, and this was from the 2024 test 1, is we can list a number of accounts and then ask you to classify it as assets, liabilities, expenses, income, and the like. And you can see this type of question is very similar to that question 2.6 in your textbook. So if you haven't revised question 2.6 yet in your textbook, you need to go and do that, because that is a nice question to test whether you know how to classify different accounts as either assets, income, proprietary accounts, and the like. And just a quick reminder is at the back of your textbook, there is a solution to every one of your textbook questions. So please remember that's a wonderful resource, because as soon as you've completed a question, then you can turn to the back of your textbook and you can go and mark your answer and make sure that you really understood this question. Now, the next type of question that comes out of this learning unit is now the question that's similar to last year's test 1 question. So in this type of question, we also give you a list of account names, but now we couple them with rand amounts. And instead of just asking you to classify the accounts like we did in that previous question, like we did in this 2024 question, we now want you to do calculations. And we want you to calculate, for example, total assets, total liabilities, and owner's equity. And this question is very similar to question 2.4 in your textbook. So certainly if you want to go and practice a question just like this, look at question 2.4 of your textbook. Okay, so calculators out now, students. Now we're going to start doing some calculations here. And the first thing then the question asks us is to work out total assets. Okay, unfortunately, I know now I'm obscuring some of the amounts here. Let me just see. I'm obscuring now some of the amounts, but at least just quickly go through this end and just see if you can identify the assets. So we're looking for total assets. So quickly read through this list and see if you can spot the assets. And if you can, then just put them up for us in the chats. So if you are able to spot any of the assets, just write them down for us in the chats quickly. No, I'm not just looking for assets. I'm looking for the actual assets. So give me from that list, which of those items there are the assets. Okay, excellent, excellent. I see some of you have got it there. Well done. Salama, will you give a star there to our pupils, our students, for getting all of the assets correct? So again, when you tackle a question like this is again where I say this page is so key, because if you don't know this page, you are not going to know which of the ones, the accounts listed there, are actually assets. So here, if we then look at our chart of accounts, you'll see it gives us the split between non-current and the current assets. But of course, in this question, they were just saying they want us to add together all of our assets. So this is why it is so key for you to know this page, because otherwise you can't answer a question like this question from last year's semester test, because you will not be sure then of that list that I've given you, which of those are actually the assets. So I've seen many of you did have that correct. So it's the vehicles, the debtors control, and the trading inventory, and not the bank. Not the bank, because remember there in brackets it said it was an unfavorable bank. So that would be a current liability. It will not be one of our assets. So if we then add our assets together, we then get our first answer, which was for total assets, which comes to 354,000. And that brings us now to the really important exam tip of the day, is to please, students, show your workings. You can see that we've allocated 5 marks to this question for total assets. So please, students, you cannot just give us one final answer, because look at the consequences of that. So here on this slide, we've got answers from 2 students. So on my left, I've got student A, and on my right, I've got student B. Both students, you can see, gave us exactly the same answer, or They both said the answer was 380,000. And what both students did incorrectly is they thought they had to add in that bank account. So student A gives us nothing but the answer, and the answer being incorrect. So student A ends up with 0 out of 5. Student B shows us all the workings, and so we can clearly see that they've gone and added in that incorrect bank overdraft. The answer is incorrect, but at least they can get some of the marks for the correct amounts in their workings. So they end up getting a 60% for the question, where student A gets 0. And remember, this test only counts out of 50 marks. So if you start throwing away big chunks of marks, like 5 marks at a time, you're going to be in trouble pretty soon. So please, students, and this slide you will see will be shown to you in every revision class from now until the end of this year. Because this is a big problem area where students often do not show us the workings, and then they really just end up impacting their own marks negatively by then not being able to get the right marks for the question. So please, students, make sure that you are showing us all of your workings. And again, guide yourself by the mark allocation. If we are giving 5 marks to a question, then it must be assigned to you to say there is no ways I can only put down one amount. They will not give me 5 marks for just one amount. Okay, so make sure you look at your mark allocation. That will also indicate to you that we are looking for workings. And then you can actually see in the test last semester, next to each of these 3 calculations, we actually wrote for the students, show us all your workings, show your workings, show your workings. So we're trying to even remind our students that please, the workings are really key when you're doing any calculations in first year accounting. Then the next thing we need to just talk about is the 2 methods that's available to you to calculate owner's equity. And again, I'm going to let it over to you now a little bit. Again, quickly in the chats, can you write down for me the 2 formulas that we use to calculate owner's equity? So let's see quickly. Write down for me the 2 formulas to calculate owner's equity. And while you're writing down, I just see there was a question here, do we write in pen? Absolutely. Please, in all formal assessments, you can only use your pen. And we will talk about that later as well. Okay, so I'm seeing only the 1 formula coming up so far. Can anyone give me the other formula? So yes, definitely owner's equity, assets minus liabilities. That's certainly 1 formula. Can you please give me the other formula? What is the other formula to calculate owner's equity? Okay, excellent, excellent. I see now some of you are starting to put up for me that second formula. Well done. Okay, so the 2 formulas then, the first one, this was the one that came up a little bit less in the chats. This is the one where we take the capital minus the drawings, plus the income minus the expenses, or plus the profit, and that gives you owner's equity. And then the one that most of you did put in the chats for me was that method number 2, where we say total assets minus total liabilities. It doesn't matter which formula you use. Both of these should give you owner's equity, and the 2 answers must be equal. So either formula that you use must give you the same answer for owner's equity. So again, in last year's semester test number 1, they asked us to calculate owner's equity. And by the information that they gave us in this little trial balance, we could use either method to calculate owner's equity, because we did have capital, we had drawings, and we had the profit. So we could use my method 1. But we also had all of the information for method 2. Because remember, here in 3.1, you calculated total assets. In 3.2, you calculated total liabilities. So you could just use your answers from 3.1 and 3.2 to work out owner's equity. And you can see both of the owner's equities are exactly the same, 120,000, and that is exactly as we would expect. But so you must make sure you know both of these formulas, because there can sometimes be a question where with the information that we give you, we push you to one of the two formulas. So this is what happened in the 2022 exam. And here you can see it's quite a similar question again, and we're asking the student to calculate owner's equity. But have a look here. Here we actually tell the students that the information above does not include all the assets or all the liabilities. And here we've underlined it as well that this was only an extract, meaning it wasn't all the accounts in the books of Fern Traders. So by giving that second sentence, then what we're saying to students is that method 2 is not going to work. You can't use method 2 because we did not give you information about all the assets and all the liabilities. So in this exam, then the students had no option but to use method number 1. And method number 1 then was the one where they would have used the capital, the drawings, and the profit for the year. So certainly make sure that you know both these formulas, because depending on the information given to you in the actual assessment, we might actually push you in using one of those two methods. So as I said, this question then was from last year's semester test 1, very similar to your question 2.4 in the textbook. And remember, your key to success in accounting is that you must try and do as many questions as possible. So even if your lecturer didn't do this or other textbook questions with you in class, in that at-home revision time, that's when you then have to do all these other questions, because in class as lecturers, we are limited in how many exercises we can do with you. But that doesn't mean you don't have to go and do all the other textbook exercises when you are at home. And then in your textbook, even right at the back of the textbook, there is also additional revision questions. So there is no less than 5 more revision questions on this type of a question right at the back of your textbook in Annexure B, and they also have solutions. If you're interested and you do want to go and do some past paper questions, if you go to your Emirates landing page and you click on library and you go to past papers and you look under A, that's where you will find these past papers that I'm talking about in my presentation today. But when it comes to past paper, a big caution. Please, you cannot jump in and start past papers if you haven't completed your revision. And what do I mean by that? You can't just come to class and then jump over into past papers, because as you can see there, you're going to have a huge gap in knowledge then over here. And then we get comments like, oh, but this assessment didn't look like the one from last year. And the reason is then because the student didn't have the knowledge over here to actually help them to answer any past paper question. Remember in that very first slide, nearly first slide of mine, I said that in accounting 1A, if you want to be successful, there are no shortcuts. So that means you're going to come to class. Then first, you're going to do all of your textbook questions and examples. And only then, if you see, okay, I've got still a bit of time before I write the paper, then you start looking at our past papers. Okay, but please, you first need to fill this gap. Otherwise, you are not going to have enough knowledge to be able to answer a question in the assessment. Salama, how are we doing out there? Is there anything in the chats that you just want to raise with our students?
Hi, Ina. Yes, can you please go back to the slide where you show the different methods of calculating owner's equity? I had a question from that for the students. And I think it's the previous slide, the one where you actually, before you did the activity. Can we have
Okay, but this one does have the two formulas, so it should
two?
you should be
Okay,
able.
should be the same. Yes.
Yeah.
And I think one of the questions from one of the students was, don't you have to use both formulas to check if it balances? So I told him it all depends if on the information that is provided. Then you'll be able to um, see, okay, that using both methods, that it will balance. And then okay, the one wanted to know where to get the memos. I said for past papers, I know you did share that they should just have a look on R. The lecturer should have uploaded it to the for as additional resources. Yeah, so they just wanted the solutions to okay. Maybe I could just again give additional just reminders again how important is the chart of accounts. Um, because if you don't know your chart of accounts, and especially with the question that we just revised now, Ina, if students don't know what are non-current assets, current assets, liabilities, income, and expenses, then they are going to use the wrong amount to get to the answers. So it's very, very important that they have to study the chart of accounts. And it's also going to be important um, as we progress actually into the other learning units. So it's so important that if they have that understanding, it will just make everything so much easier going forward. Thank you.
Great. Thank you, Salama. Right, so now we're going to move over to our accounting equation, which you all gave us nicely earlier. So where we said the assets must equal the owner's equity and the liabilities. Okay, and what we're going to do next now is we're going to take a series of transactions, and we are going to look at the impact of these transactions on the accounting equation and also on the general ledger. But just a quick reminder, when we do the impact of the transactions on the accounting equation, just remember again that owner's equity is the one that consists out of these four components: the capital, drawings, income, and expenses. And that's key to remember that when we now look at accounting equation questions. And as Alama said, and as I said as well before, this page, people, this is the page you must know for this test, but also really, even in second semester, you will see I will still bring up this page because it is so important. And right here at the top of the page, you can see we even provide you with the accounting equation. And then directly below it, we also give the four components of the items that make up owner's equity. So this page is really a wonderful one-page summary that's got all of these details for you on one page. So now we're going to go to a question, a past paper question, where we asked the students now to record the impact of transactions on the accounting equation. And this one is kind of similar to question 2.6 of your textbook, and it is the 2023 test one that we're talking about now. But now this brings us, before we can look at the question, to our next exam tip. And this is managing your time in the assessment. And besides students not showing their workings properly, this is probably the other big problem that we see students have in an assessment. And this is not managing their time properly. So they end up overspending time on one question, which then means they either can't complete some of the questions at the end. So they either leave out a question or they rush through a question. And all of those have a very negative impact on marks. So when you're now in that assessment venue on Friday and you're starting a new question, your first order of business is to see how many marks have been allocated to this question. Then you're going to take the marks and you're going to multiply it by 1.2. It's not a markup now. This is just to work out your time. And so we know now you can use 18 minutes to complete this question. So this means that you should not spend more than 18 minutes in the assessment on this question. Because if you spend more than that on completing this question, you're going to have to start rushing at the end, or you're going to start leaving out questions, which we don't want you to do in an assessment. So that's exam tip number 2 then, is make sure on Friday you are managing your time. And then our next exam tip, and we've spoken a little bit about this one earlier, is the one to read your required with care. To really make sure you understand exactly what we want you to do in this question. Because if you just kind of say, oh, okay, looks like an impact on the accounting equation. Right, let me jump in and do that. But maybe you miss out that we also wanted the general ledger accounts. Then it's going to cost you a lot of marks. So please make sure you look exactly what we want to do. You can see we even, in some instances, give you an example. So spend the time to go through the example and to make sure, okay, yes, now I understand now. I know what they want me to do. So in this question, then, there's 2 things they want us to do, the impact on the accounting equation and the general ledger. Okay, where, for example, if we look at this test in 2015, there they only wanted the student to do the impact on the accounting equation. So that's why I said earlier it's so important to make sure you are reading your required. Is it a question like 2015 where it's only accounting equation, or is it a question like 2023 where it's general ledger and accounting equation? Okay, so make sure you are reading and doing exactly, because remember, we give marks to what we ask for and time for what we ask you to do. Okay, so let's start then with this first transaction. So our owner contributed a vehicle worth 200,000 rands to the business. So what is going to be the impact on the accounting equation? Our owner's equity is going to increase by 200,000 because it is our owner that is giving us the vehicle. And then we know that vehicles are assets, so assets will also be increasing with 200,000. And there will be no impact on liabilities. So in the example, or in the question in the test, they were, sorry, if I can just go back there. In the test question, they're talking about a vehicle that's being contributed by the owner. But just remember that our owner can contribute either a vehicle or an asset, like a vehicle, or the owner can also contribute cash. And whether the owner is contributing an asset or a cash or an actual asset to the business, the impact on the owner's equity remains exactly the same. So if this question said the owner contributed 200,000 Rand cash, our impact on the owner's equity would have looked exactly the same. So in both instances, it would lead to an increase in assets and an increase in owner's equity. Okay, but in this question then, remember, they asked us to do two things. They said, show the impact on the accounting equation, which we've just done, but also on the general ledger. So we also now need to say for this a transaction, which general ledger account are we going to debit and which account are we going to be crediting. So before we can talk about that, let's just quickly make sure we all know what is a general ledger. Because otherwise, how are we going to be showing the impact on something we don't know what it is? So in Learning Unit 1, then, you'll remember we have those all-important definitions. And one of the definitions out of Learning Unit 1 is for a general ledger. So I hope for Learning Unit 1, you're also studying all of your theory for that learning unit. So a general ledger then is defined as a collection of accounts. So if we had to depict it as a little picture, this is my general ledger, and inside of it will be lots and lots of pages. And on each page, there will be a collection of different general ledger accounts. Now, then the impact for this transaction on the general ledger will be we will debit the vehicles account with 200,000, and I'm going to credit the capital account with 200,000. So that is the impact on the general ledger where the owner contributed a vehicle worth 200,000 rands to the business. But of course, now the next question is, how did I know to debit vehicles? And how did I know that I should credit the capital account? And the best and easiest way for you to remember that is to use our DED-CLICK acronym. So DED stands for debit, expenses, assets, and drawings. And CLICK stands for credit, liabilities, income, and capital. And if you use this acronym, it will help you to determine should I put that specific entry on the debit side or on the credit side. And specifically, if I say debit, I mean if I'm going to increase the general ledger account. And on this side, if I say credit, again, I'm referring to an increase in a general ledger account. So my assets increased, so that's why I put it on the debit side. And my capital increased, and that's why I put the entry on the credit side. In your textbook, you'll see they also explain it like this. They tell you that for anything that is an application of funds, which is your assets, expenses, and drawings, we're going to put the increases on the debit side. And anything considered to be a source of funds, which is your capital, income, and liabilities, we're going to put those increases on the credit side. And Salama, here's your tip of the day. Do you want to just talk to our students about this?
Hi, Ina. Yes, please, when you are going to be analyzing your transactions on the accounting equation, I would encourage you to write this down in your answer booklet. So above your assets, you'll put your debit, credit, your plus and your minus, and then owner's equity, as Ina had mentioned earlier, the four components or accounts that owner's equity is drawings, expenses, capital, and income. And clearly you can see from the pluses and the minuses, the impact there. And then, of course, liabilities we know is the opposite of our assets. And this, for me, I always tell the students, is very important, because if you are not sure whether it's a plus or a minus, then this will help you. Okay, if you know you're debiting an asset vehicles, okay, then you know you have to put a plus next to that amount. Okay, and if you create an asset like bank, then you need to know that it will be a minus. Okay, and similarly the same for if you're going to debit drawings and you're not sure what impact drawings has on owner's equity, then this will help you to know that drawings should be a minus. That amount should be a minus under owner's equity. Okay, good luck everyone.
Thanks, Alama, for that. Students, I'm sure some of you are getting a bit anxious, but we will be having a comfort break. I will give us a break just now. So if you can just bear with us, I just want to sort of complete a section before we do have a little leg stretch. So don't panic. We're not going to go the full 2.5 hours without any break. So just be aware of that. Okay, so we said then our impact on the general ledger was that we're going to debit the asset, the vehicles account, and we're going to credit the capital account. So you can see then for vehicles, I used my DED from my acronym, and for capital, I used the CLIck to determine that it had to go on the credit side. Also, just to refer you back to your textbook, because remember again, your textbook is your best resource. You can look there at section 2.3 in your textbook for more on the impact on the general ledger. So that brings us back then to our double entry rule. And remember also already way back in learning unit number 1, we said that Luca Pacioli developed this accounting theory. And what we mean then by double entry is we mean that for every transaction, there's 2 entries, and 1 entry must be debit and 1 entry must be credit. Okay, so that we actually call this the golden rule of accounting, is that every transaction must have at least 2 entries, one of them being debit and one of them being credit. Even on ARC, you'll see on ARC there's some videos that has been uploaded there into ARC for you, explaining debits and credits, as well as your double entry accounting. So you can also go and watch these videos on ARC. Okay, so remember the question then said we had to do 2 things. We had to show the impact on the accounting equation. So that's where we'll put in the amounts to show the impact. And we had to show the impact on the general ledger. So that's where we're going to say which general ledger account we'll debit and which account we are going to credit. Okay, so let's move on then. Salama, I see I've got you up again here on the slides. Salama is just going to talk you through quickly when you're faced with a question like this in an assessment, how do you break it down for yourself and how do you go about to answer it? And she's developed for us 6 nice steps to help you break down a question like this in an assessment to optimize your marks. Salama, over to you.
Thanks, Ina. Yes, as mentioned earlier, that is why it's so important that you need to draw those little tips that I gave you in the earlier slide that Ina shared. So step number 1, again, very important that you need to read the transaction with understanding. The owner contributed a vehicle worth 200,000, okay, to the business. The word contributed already gives you a clear indication that this is part of the owner's capital. So you've already identified, hopefully, now we're moving on to step number 2. You've identified 2 or more general ledger accounts. So we have capital and we have vehicles, okay? One of those accounts then have to be a debit or a credit, right? Okay, so step number 3. Now, the first thing already, once you've identified the 2 accounts, you will then now have to classify. So I would then suggest the first thing you do is now you record the amount. You know it's 200,000 and you know that capital affects owners equity. So you're going to record the 200,000 and owner's equity, and you know vehicle is a non-current asset, so you're going to record the 200,000 under assets. So you have done step number 3. Now you need to
Sorry, Salama, I think we've lost you a little bit there.
Okay, right. And that little tip that I gave you will guide you. Whether you need to put the plus or the minus next to that amount. Okay. So, Rina, is it possible that maybe you could share that tip? Um,
That previous one we had. Salama, at
yes,
times
yes,
you breaking up a little bit. I hope our students are able to hear you nicely. Oops, yeah. So
yes,
this
I
is the
saw that.
one. So this is the one that Salama means. So this is the one that she's talking about there in step number 5.
Yes, so in step number 5, we remember now you've identified that it's the two accounts is vehicle and capital. The vehicle is an asset and capital is owner's equity. Okay, right. So the minute you have already, this tells you that capital needs to be credited. Okay, so then clearly other account definitely needs to be debited. Right. And then when you debit an asset, you would also know that it must be a plus. Okay. And please also, step number 6 is very, very important. I always remind my students that the equation must always balance after every transaction that you are analyzing on the accounting equation. Okay, it must balance, and your left-hand side must always be equal to the right-hand side. Okay, all right. So please do follow these steps. I know maybe it's going to be too much for you to remember, but if you are going to draw that little tips that I've just shared on your answer book, then you'll be able to implement these 6 steps. All the
Great.
best, students. Thank you.
Thanks, Salama. Okay, so we're back to our question now, and we're looking at the impact of these different transactions on the general ledger. So that's these first 2 columns and the accounting equation. And in this question, as I said, they only asked us to deal with that asset, that vehicle that was contributed. But I also just wanted to show you it looks the same if it's also a cash contribution from the owner. So the owner's equity side looks identical. It's just here in terms of which general ledger account we're going to debit. That will be the only difference between cash contribution and an asset like a vehicle. In the next transaction, here they tell us now we're buying inventory for cash. So here we have got our 2 accounts is we're going to debit the inventory account and we're going to credit the bank account. Both of these accounts are current assets. So we only have an impact on our assets in the accounting equation where our assets are increasing and our assets are decreasing. So this one then has no impact on owner's equity, no impact on liabilities because both of our accounts are assets. So let's go to our dead click again. So dead click said we're going to debit an asset that's increasing. So trading inventory definitely an asset and it's increasing. So we're all happy to debit our trading inventory. But bank is also an asset. But this asset, bank asset, is not increasing. So I can't debit bank again because that asset is not increasing. So when your asset decreases, that's when we're going to credit it. Okay, so the trading inventory asset increased. That's why we're debiting trading inventory. But our bank asset decreased. And so that's why we're going to credit our bank account. And the same works for click. As long as it's increasing, it will be on the credit side of the general ledger account. But the moment there is a decrease in a liability account, then we're going to do that on the debit side of the account. So let's look again at our general ledger. So yes, I debited trading inventory because there was the increase. But then in my bank account, that was where there was the decrease because I physically paid for the inventory. So that's sitting on the credit side. And remember, earlier we said for a double entry, we need 2 entries, but one must be debit and one must be credit. So that's why the bank entry must be on the credit side. So also I wanted just to show you, so in the test, it was a cash purchase of inventory. But if the question said it was a credit purchase of inventory, then I would have included the 10,000 rands under liabilities. Okay, so for each of these transactions, then just have a look. So the first one is the bank. That's for the cash purchase of trading inventory. And in the second instance, it is a credit if it was a credit purchase of inventory. The next transaction they give us in the question is that there is a sale of trading inventory. And in this question, it was a cash sale, but it actually wouldn't have mattered if it was a cash or a credit sale. Whether it's a cash or a credit sale, the impact on the accounting equation remains exactly the same. So a cash or a credit sale increases the assets, increases the owner's equity with the income. But remember, because this business was using perpetual inventory, we also have this second transaction where we're reducing the assets with the inventory that was sold, and we're reducing our owner's equity with the cost of sales. And the reason why we have that is because we're using perpetual inventory in this question. And so you must remember that your sale is always going to have 2 double entries. Salama, I won't give you a chance to chat about this now, but we will talk about it a little bit later in the presentation. So to have a look then at the full entry, so we had the cash sale for 1,000 rands. And as we showed you, owner's equity and assets are increasing. We're going to debit our general ledger bank account, and we're going to credit our sales account. That is then the first entry. And then the second entry is that we also need to take it out of trading inventory. So we're going to subtract from the assets, and we're going to subtract from the owner's equity for the cost of that sale that we have just made. Again, it's important that you must know this chart of accounts. Otherwise, you're also going to battle to know what is the correct general ledger account names. So then you're not going to be sure, do I call this vehicles? Do I call this consumables? What name is the correct general ledger account name for this particular transaction? And this is once again where this figure 2.2 in your textbook is going to come in to help you, because all of the words listed here, all of these are general ledger account names. So if you're reading a transaction, you think, I'm not sure what to call that general ledger account, then again, think back to this chart of accounts, because this chart of accounts again will help you to get correct general ledger account names. The next transaction they gave the students in that assessment was the owner taking cash from the business. And remember, when the owner takes anything, it goes to the drawings account. And we're going to debit drawings. We're crediting bank because we're decreasing the asset and we're decreasing owner's equity. So this would be an example if the owner would take cash from the business. But remember, your owner could also take an asset from the business, like trading inventory. And then again, the impact here on owner's equity looks the same. It is just going to be your general ledger account name that is going to be different, whether the owner took cash from the business or if they took an asset from the business, like trading inventory. So what you may have noticed in transactions 2 and 3, and then in the one that I added to number 4, all of them impacted trading inventory. In number 2, we bought trading inventory. In number 3, we sold trading inventory. And in this one that I created in number 4, the owner took some inventory. And the reason all of these transactions impacted the trading inventory account was because the business made use of the perpetual inventory system. And please, for a discussion on this system, you need to go and look at section 2.4 of your textbook and question 2.13 in your textbook. So I'm essentially referring you to this table in your textbook. Because in Learning Unit 2, we just kind of give you a very brief introduction to the two inventory systems that can be used by the business. And you will see the bulk of Learning Unit 2 questions deal with perpetual inventory. And then in Learning Unit 6, for semester test number 2, that's where we're going to jump in and do the two inventory systems in a lot of detail. So now in terms of a Friday's test, we expect you only to know the inventory systems to the extent that they are discussed in your textbook. So with other words, this table on page 68 of your textbook, you need to make sure that you understand this table. And then later, when we do our revision for semester test 2, I will go into this in a lot more detail. Then the next transaction that the test question had was just some income received by the business. So we're going to credit the income account, we're going to debit the bank account, increase in the assets, increase in the owner's equity. What this semester test didn't have was any examples of where we pay for expenses. So I've just included here in my slides two more examples, one where we're paying salaries and one where we're buying office refreshments, because I just wanted to talk to you a little bit about this minus that we have here in the owner's equity column. And you can also see there's the minus over here where we had the cost of sales, and there's the minus over here where we had the owner's equity. And sometimes students just struggle a little bit to get their heads around, why are we saying owner's equity is minus, but salaries are increasing? And why are we saying, again, owner's equity is minus, but we buying more office refreshments? And to understand that, we need to think back to this slide of mine. And remember again, owner's equity has those 4 components. And it really goes around these components down here at the bottom. So, for example, let's say now we paid those salaries, that 8,000 rands salaries, and we want to know the impact on our accounting equation. So yes, we all agree our expenses increased because we paid 8,000 rands of salaries. But the impact on owner's equity is a minus. And the reason for that is when we talk about expenses and when we talk about drawings, we talk about the overall impact on owner's equity. Yes, the individual expense increases, but because the individual expense increases, the impact it has on owner's equity is that there is now less profits for the owner to take home. Because remember, income minus expenses equals profit, and the profit belongs to the owner. And so the higher my expenses are, it means the smaller the owner's equity is, the less profits there will be for the owner. And that is why over here we indicate that with a minus. Okay, so this minus here is because of the impact it has on owner's equity. Okay, everyone good with that? Salama, I'm over to you. Any questions from our students?
I think that they just have a bit of concern whether they will be assessed on the periodic. I've just reminded them that they have to revise to 13 and that on page 17, the 2026 version. And we will be discussing, of course, in Learning Unit 6 more the periodic. Maybe you can also, I suppose they are thinking that it hasn't been, one of the students also asked me about the T accounts from past papers. He hasn't seen any T accounts being assessed, but I did explain to the student that in question 2.9, because we did practice the double entry in the T accounts, that they could possibly be assessed on that. So it's just best to revise whatever questions in the textbook. They should revise all those questions in the textbook. And then, of course, just with rent received, interest received, they can also use rent income, interest income. I did say that that is fine. That was a question there. Okay, so I don't think I have anything further to say here, Ina. Thank you.
Okay, great. We're going to soon wrap up on Learning Unit 2, and then we will have our comfort break. So if you can just hang in with me, there's just a few more things I want to show you on Learning Unit 2 before we have our comfort break. So this then is the answer now for that past paper question that we've now been working through, where we've now shown the impact of these transactions, these 5 transactions, on the general ledger and on the accounting equation. And once you've completed a question like this, we recommend that you quickly just do a test for yourself. And you quickly make sure that, yes, my assets are equal to my owner's equity plus liabilities. Now, of course, in this question, liabilities was 0. Owner's equity then comes to 200,450, and so too does the assets. So it is important that you just quickly double check yourself, because that will help you to spot things like maybe you made plus here and minus there, or maybe you said 500,000 here instead of just 500. And so that will help you to pick up little errors like that to once again, because remember on Friday, it's all about optimizing your marks, and you want to be sure that you're not losing marks unnecessarily. So definitely quickly just do this calculation so that you can be sure your impact on this side is correct. So in terms of our exam tips then, is make sure then at the end you check to make sure your accounting equation is actually true. And then also, students, please do not forget to show us your actions. With other words, to show these pluses and these minuses. If you only show us 500 and not minus 500, then you can't get the mark, because then we can't see if you knew the impact on the accounting equation. So please, both of these tips are really key. Don't forget to show us the pluses and the minuses when you do a question like this. In first year accounting, you will see that there are really only a limited number of transactions that we can test you on, whether it's the accounting equation or when we move into learning units 4 and 5 and we start asking you to do the journals. So if you know how to do the impact on the accounting equation and the general ledger for these basic entries, then you will see that every question in the textbook and in past papers are all really just built around this limited set of entries. So please just talk through these entries and just say to yourself, can I do for each of these impact on the general ledger, impact on the accounting equation? And to help you with this, we've actually, all your lecturers have uploaded for you to ARC this worksheet. And this worksheet it consists out of 2 pages, and it's got the most frequently asked transactions on it, and it also comes with a memo. So please, if you haven't worked through this worksheet yet in your preparation for the semester test, please work through this, because this really takes you through all the most common entries that we can test you on in first year accounting. Because remember again that your key to success is to do as many questions as you possibly can. So this one I would really recommend in your preparation. I think it's time. I'm going to just take this a little break now. Yes, I just want to show you this, and then we will go into our break. If you still need more revision on Learning Unit 2, please remember we did create those catch-up videos. So there's no less than 2 catch-up videos on Learning Unit 2. And you find them on your My Emirates, My Academics. That's where you can find them. And I know some lecturers also just shared them on ARC. So some of you might have them on ARC as well. So please go and watch those videos if you feel like, okay, I need a bit more on what was discussed today. And then I think I'm going to just skip through this one as well. Then I think we're going to go into our 10-minute break. So it's now 11:24. Please, if I can ask everyone to be back in the classroom at 11:35, and then we're going to jump in with our Learning Unit 3 revision. Okay, so let's take a quick comfort break. Please sign the register for me. Please sign the register, and then I'll see you back at 11:35.